What's going on, guys? Good morning. Welcome into another pre-market session here with the Everyday Growth Advisors. Just wanted to stop by to kind of give you guys my framework for today's FOMC meeting. I will not be trading for most of the session today, and I think that I will probably only trade probably tomorrow. There's a very low chance for us to kind of get any big movement today prior to FOMC. And so I'm not really looking to exploit any of this price action. If anything, the risk to reward ratio is baked in and asymmetric to the downside, which means to say that it's obviously a better play to take bearish plays right now than upper bound plays. However, obviously there are a couple of things that you have to take into account, which are really important. And the first thing here is we still do have this ground to cover all the way up to 40.60. And if you read the newsletter from this week, then you would know, that's pretty much the level that we've been watching for a rebound this whole time. And as I had mentioned many times before, the bear market is now over. So the market's really just priced in peak pessimism at this point and is looking for anything of a reason to rally up into the stratosphere. So it'll be a good idea to hang and stay cash today ahead of FOMC, and then once FOMC is done, you'll be able to actually get a better sense of understanding on where this price action is about to go. Now, 40.60 is still the key level here, and obviously if you look at it from the risk to reward ratio standpoint, you can see that this upside here is not really that great compared to all of this downside that is ahead of us. So if we look into the smaller time frame, which is around the 4-hour time frame, you'll be able to understand that this upside here, even though there is a significant upside, it also coincides with two past resistance areas, or three past resistance areas, but ultimately could lead us back up into the 40.60. So if we are going to look at some of the bigger market cap stocks like Apple, for example, you can see that from the long-term perspective, it's coinciding with this trend line here that's been testing as a pretty much a resistance. So if Apple doesn't break out here, or it does, then that whole market situation is going to melt up or not melt up and kind of move back down. What's up? Good morning. Hi, Mark and Santosh. Welcome back. So you can see a similar situation here with Google, and then a similar situation with Meta as well. You can see these are all past resistance points that we've been at. With Microsoft, it's a little bit of a different but kind of similar situation. You can see that this is still a past resistance, and it does look like this is a potential level for us to kind of fade away. But remember that the FOMC decision is all it's going to take to push this market into the direction that it needs to go. So what is the framework for today's Fed decision, and how do we play it? So I just wrote a little blurb on the Telegram group if you haven't looked at it. And I also extended the same blurb on our Discord. So I'm going to go through it with you guys right now so that you kind of have a good idea on what to look out for today. So the first scenario is going to be a no hike scenario. And this no hike scenario is actually most probably going to lead to a sell-off. This is the part which I think a lot of people will get confused on, and they won't quite understand why a no hike scenario is going to cause a sell-off. And for me personally, after doing this for an extended period of time, you start to understand the market doesn't exactly take good news as good news. Sometimes it takes it as bad news sometimes. And so you need to understand that if the Fed decides that we're not going to hike, this is going to actually spook the market a little bit, because it's going to take it as though the Fed knows something about the economy that others don't, or rather the fears of something is going to break, and therefore it's going to also set in some recessionary fears. So imagine if the Fed says, oh, you know what, just kidding, we're going to stop our hikes in advance, it's actually going to cause the opposite intended consequence of what people are expecting. People think no hike means market's going to go by like rally, but that's not actually the case. The case in which the market will go bye-bye or sell off massively is the 50 basis point rate hike. And that is the case because it will send a panic through the stock market, and likely because it presents the opportunity for the Fed to break something. So that's what I'm going to be looking at for today. 25 basis point rate hike is the expected and the priced in rate hike scenario. This is a 86% likelihood, as it is baked in by the federal funds rate right now. And this should lead to an initial sell-off, but it should rebound by the end of the session, probably up either even or very slightly to close the day. So that's kind of the framework that I will be looking for to trade this. Now, based on everything, remember the most important thing And I hope that, after attending multiple Fed FOMC prep sessions with us on the Everyday Growth Advisors, you kind of understand what is the most important thing. It's not the rate hike decision. It is the press conference. Okay, so the press conference is the most important thing, and I always keep mentioning to you guys about this because anything can be asked during the press conference that's going to shake things up. And so please do not trade until after the press conference, because it's not going to be helpful at all. The market's likely to move either sideways, up and down aggressively. Maybe the market might go up to 40.60 and surprise everybody. Sure, that's great. Risk to reward ratio is there. Not that great for the upside, so I wouldn't take it anyway. But if we do get to 40.60, then that's going to set us up for a potential down move here ahead of next week, so that we can start to rally after that. So there is a very low chance that I will be trading today. And if I do trade today, it'll be very, very light, and it's likely to be on my small account. And then I will, probably only trade on my main account tomorrow. For this week, you know what? The week didn't really start off very strong for me, to be honest. I'm only up about $2,000 for this week. And it's been a pretty tough week. I just traded a little bit of BABA yesterday and CRM that ended up paying out. I took a SPX put contract, that 0-day contract that went really badly against me, so I had to cut it, risk management 15%. It went it almost instantaneously hit my stop loss, so that was not a good one. And then obviously I tried to play Disney one time but failed that one, and it ended up actually getting to my strike price. So it's not really been a great start to my week. As you can see, Disney's up at $97 now. But I do have obviously some setups to show you guys, and here are my top two setups from today. Zoom is one of them. And on the 1 hour chart, this is simply a beautiful setup. So Zoom has this pretty much 72.30, or let's just call it $73 level, that it needs to break out of and start forming a base around for the upside to be reclaimed. Now, if it doesn't go to the upside and reclaim it, then we'll be looking for that $72.30 to $73 level for a rejection to this downside play again. So I'll be looking at this one very closely from a risk reward standpoint. It's a great trade either way. If you go for the bullish setup here, the risk to reward ratio is about 1:2. If you go for the bearish setup here, you can very easily manipulate your trade to give you a 1:2 risk to reward ratio. So I like this setup all in all. There is both upside and downside scenarios here, and I think that if you do play it, just make sure that you keep your risk assignment relatively small and go for it. The second one is Airbnb. This one has been forming into a really big kind of bull flag, but not a bull flag anymore. This flag here, it actually retraced more than 50% of this entire wave. So this level here is actually 50% of a retracement from the top and bottom. Therefore, this doesn't make this flag valid anymore. But the interesting thing here would be that the key pivot point is going to be 126 and 120.60, or around 120, basically, like around exactly 120, right? You could get this down a little bit, and you could also argue to say that obviously the bullish breakout level is going to be like way up here at 131. But remember that if you're just looking for that local high, then 126 does it, because this is a previous level at which we saw a slight level of resistance. So a break above 126 area, and then a retest, maybe pull back around this 120 level. So looking something like this, kind of, right? Would actually set us up nicely for a move higher in the coming weeks. That's what I'll be looking for on the upside. If this is a downside scenario, then we are kind of looking for a potential breakout, but a rejection at 126, and then the force back into this channel down. And then that's going to continue this way down back into the $97 to $100 level. So that will be two of the top watches for me in the next couple of days. I'm watching these two, and I'll be looking for volume and momentum to continue to get into these stocks. On the other side of things, Bitcoin has been rallying pretty interestingly, so a little bit of a risk on consensus in terms of protection against other types of currencies. And then obviously a decent amount of buying has been coming into financials, which is a good thing, obviously, mainly thinking about how they were really massively sold off last week. So expect some of that to also cool down. And then we had a very nice pullback on energy, oil and gas. So we'll be looking for potential, sideways movement here. If we can get back into 126, I would be happy to maybe play puts again, to play this down into maybe a sideways channel that's about to form here, potentially. And if we break above 126, then obviously that's going to make all of this void. So that's just, some key things that I'm looking out for. Remember, there is the macro picture on energy, which I am not discussing with you guys on here because it's very long-winded. But if you follow energy markets, then, you probably understand, what I'm talking about. So there is a lot to kind of unpack here, and it's going to take a while. But maybe I'll do it on a different live stream when we have more time. But that's all I have for you guys today. If you have any questions, comments, put it in the chat right now, the comments right now, so that I can take care of it. Dollar index still moving further down here, so this is still pretty positive for equities. And of course, the entire bond market saw a little bit of inflows yesterday. So, obviously bond traders are starting to kind of reprice in the possibility of those rate hikes coming back into the market. I think, there's just going to be a lot of uncertainty heading into FOMC, which is going to cause a lot of, mismatch pricing. Lastly, the VIX back down to 21, just like that, right? After spiking very high last couple of 1 to 2 weeks, all the way up to 28 and barely touching 31. We are now back into the green zone again. When I say green, I mean, 21, 18, 22, 18, and 22, 19, and 17, right? I should actually really fix these numbers. It actually kind of bothers me. So, yeah, those are my key levels for VIX, which they kind of are key points. So, yeah, that's all I have. Do you guys have any questions for me today? Let's see. Let's see if anyone has any questions. If not, I'm going to end the stream early today. I will not be trading, but I will be working on the webinar. Just a quick reminder that we are 5 days away from the webinar, the biggest webinar event for EGA this year. I highly recommend you guys that you attend it. And if you haven't got a time to sign up for it, please go sign up for it, because it's going to be a very important webinar of the year. The replay will not be available until the week after, so make sure that you do attend and sign up for the webinar so that you can at least get the replay earlier and watch it sooner, because we'll be covering quite a bit of important stuff. One topic that we're covering is the bond market. So, for example, when I keep talking about all of this stuff relating to the yields and what is all of this, right? What is the entire bond market? How does it work? How does it relate to the Fed? How does money flow through the system, for example, right? That's a very important question that you should ask yourself as a trader. Or what are bonds actually for, right? And then second thing that we're going to be talking about is market psychology. And I'm going to be talking about some of the key things that I have learned over the past years to really get you on the right track there. And so I will be having a pretty much 30 minutes to 45-minute lesson on that during the webinar. I think the webinar is probably going to stretch a little longer than 1 hour. Good morning, Key. Could we get Tesla? Could we get Tesla past 200 and NVDA past 265? Obviously, with good volume retest. I mean, sure, absolutely. I think it's very possible, but the question is if indices are going to cooperate with you. And the point of the matter is, look at where NASDAQ is. It's pretty much approaching that resistance level, or it is at resistance level, and kind of got rejected yesterday. If NASDAQ breaks, then yeah, Tesla gets after it, and it has the boost and cadence. And the same thing goes with SPX here. It's sitting in that short-term level of resistance, even though many might not see it, but this is a resistance level where it is right now. Currently, you can see this has been past resistance and support. This is a dual zone right now. And so at this level, if it breaks out, then yeah, sure, there is that upside. So it is all going to be contingent on index cadence to some degree. I'm not saying it's not possible. It is very possible. It's just, there is a pretty large upside here with Tesla. And Tesla does tend to move pretty erratically. So if FOMC meeting comes out and after the presser everything goes as planned, then expect Tesla to be one of the first few to move up and try and close this gap around 215. If not, and the market throws a fit, then you likely see it try to reject, make a wave down, and then eventually go back up there at some point. So my key levels for Tesla right now, as you asked, Let's see. So this level here is obviously a key level for resistance, and then if you get up to, at max, you get up to $200.33 or somewhere around there, like somewhere around here, pretty much. Let's see. I want to say actually it's not really at $200. It's actually exactly where below where it is right now, about 198 basically. If it gets above 198 and holds above 198, then yes, the next level is going to be around 205. And above 205, we'll see it probably get up to around 210 and then 215 after that. So that will be the key levels for Tesla in terms of the pivots for the upside. Downside, if it fails to break out here today and hold above and market pulls back ahead of FOMC, then likely back down to 191 or 192. And if it breaks further below that, then probably back down to 185. Obviously, I think this scenario is 185. Back to 185 would require some, pretty deep sell-off on NASDAQ. So, noting that the mega caps have been extremely strong the past couple of sessions, that pullback will need mega caps to participate. So we will need to see pullbacks on Apple, we'll see pullbacks on Google, we'll need to see pullback on Microsoft, we'll need to see pullback on Amazon, everything that has been running, we'll need to see pullbacks on all of those in order for Tesla to cooperate, and then Tesla will fall. Okay. Remember, this is a game of market caps. It's nothing else more than that. If you have a ball that's very heavy and it's rolling down the hill, it's likely going to attract other bigger, other smaller rolling balls because it's going to leave a path in the way that it moves. So similar analogy with the stock market. Whenever you have big market caps all moving at the same time, that's going to hold the market up or send it down. It's really just depends on the cadence of everything. Okay. And then NVIDIA is the other one, of course. Let me have a look. Let's see. NVIDIA. Okay. So obviously this one's been on a crazy rally, right? And this level here, 268 or 270, whatever this level is, as I mentioned to you guys yesterday, or day before yesterday, I have no intention to trade NVIDIA because this thing has been on a crazy uptrend for how many weeks now? Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks straight. Okay. People who've been trying to short this have lost pretty much all of their accounts. And I always like to tell you guys, whenever something like this happens, stop trying to short it. It's no point. Yes, you might catch it like a very small move down, but you'll never be satisfied. You'll keep telling yourself like, oh man, I didn't get to short it like the full thing. And that's one of the biggest mistakes that majority of day traders make, is they want to eat the whole damn fish. They want to eat everything, right? I want the whole move. I don't want just a partial move, right? And so this level here at the 270 is going to probably be a level at which we'll see a little bit of resistance, and then maybe see a potential move back down to around 255, 256. That's probably a pullback level. And then after FOMC, you'll probably get a bigger picture on where things are going to go. As if I have not made it clear enough, today's FOMC meeting is extremely important, and it's going to set the tone for the entire year, or rather at least the second quarter of 2023. Because this is going to be the last meeting, and we won't have one in April. The next one will be in May. It's going to be a more exaggerated meeting today. So I highly recommend that today you take the day off. Don't trade. Take the day off. I'm telling you, it's pointless to try and trade today because you're going to get yourself into a pickle. You might take upside exposure and the market will sell off. You might take downside exposure and the market might buy up. Everything today is a coin flip. There is no edge, okay? And when there's no edge, you stay out of the casino, okay? Stay out of the casino. So that's all I have for you guys. I hope that was helpful, Eddie. Your upside, your rejection level is going to be around 268, 269. Downside pivot all the way down to 250, what would I say, 258, somewhere around there. Maybe even 256. And if it does break this, then it's probably going up to 290. So that's going to be the levels that I'm watching for NVIDIA. I won't short NVIDIA until we get some bad news on either semis or AI. Some kind of news has to drop relating to semis or AI, then I'll start shorting it. Because you know how the news pretty much cycles those kinds of things. So once you have the catalyst, then this thing will start to drop. Until no catalyst is formed, NVIDIA will keep ripping and going higher up into this 290, even 300, blah, 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 all the way up to 340, probably even going to all-time high. So you can see that this, and you can also imagine one thing, when the rest of the market starts to recover, and everything else starts to buy up and recover from this downtrend that it's in, which, by the way, obviously Microsoft has recovered pretty nicely here. Meta is in the process of recovering here, right? You can see all this on the weekly. Amazon obviously is a little further away because it's in the consumer discretionary sector, right? But once all of this starts to recover, then NVDA will likely see capital flowed out, because all of this money that has been made now needs to flow somewhere, and all that alpha is going to be generated in other sectors of the market. Things like small cap, things like Zoom, things like Airbnb, things like Tesla, things like Baba, things like Disney, right? So all of those things, okay? So either way, when the time comes, you'll see the opportunity. I think till then, hang tight. Don't try to play NVIDIA. Stay out of it for now. Know when the odds are in your favor and when it's not. Now it's not. Things are overbought. Don't overpay for the premium. People are still going to chase this to the upside. People are still going to bet to the downside. You're approaching a key pivot. Let's see how it interacts with that, and then you get your answer. All right. And with that, I leave you guys to a peaceful trading day. I appreciate you guys tuning in. Once again, if you can smash the like button on your way out, I'd appreciate that. If we can get to like 16 likes today, that would be cool. And that's all I have for you guys. Take care, and I'll see you all on Friday after FOMC. I'm going to trade on the Discord with the team. Maybe I will be there for like 30 minutes to just kind of give them a lowdown on what to expect. And I won't be trading today on at all. So I'll see y'all back on Friday, and till then, take care, guys. Peace.